Hey my friend, this is Prajwal. We are going to analyze Reliance Industries and see their latest investor presentation. So the first thing that we see here is their revenue, which has reached 11,75,919 crore. More importantly, the growth of the revenue is 9.8% over last year. And similarly, for EBITDA, the growth is 13.4%. And the most important number is profit after tax, which has reached 95,000 crore rupees. And the growth over there is 17.8%. So here we see that the revenue has grown just about 10%, and the profit after tax has actually grown by 18%, which means their margins must have increased. The revenue hasn't increased that much, but profit after tax is growing faster. Now let's see how their different segments are doing. So the entire consolidated EBITDA is around 2 lakh crores, out of which the most contribution is coming from digital services, that is Jio or Jio platform, and that is 76,000 crores. And if I club retail also with that, it would make over 1 lakh crore rupees, which means their major contribution is coming from new business, which are Jio and retail. Whereas the traditional business, oil to chemicals, oil and gas, are contributing little less than half. So obviously, these new businesses are have more longevity, probably more growth, and are not cyclical. And these are consumer facing, right? So these businesses will be valued higher, and oil to chemicals and oil and gas are valued lower, because these business will eventually die, or the growth will slow down, right? So it is a good thing for the company that the consumer facing brands are now so much bigger that basically Reliance is now no more a oil to chemicals company. It is now more of a consumer facing company. Jio is their main business. Okay, so here we see their EBITDA growth over 5 years. So it has actually from around 1 lakh crore rupees, it has doubled to 2 lakh crore rupees, more than double actually. So it would be around 15 to 16% growth CAGR, which is very good. And we can see the contribution of digital services and retail has actually increased, because digital services is up 2x, retail is up 2.5x. And now let's see their quarterly results. And comparing it with the same quarter of last year, the revenue has actually increased by 13% and has reached 3,25,000 crores. But we can see that EBITDA or profit before tax and PAT has actually degrown. So the margins must be lower here. Something must have happened. But you see, basically the point is, in the long term, if the margins remain stable, whatever the margin might be, for example, let's say the margins are 10%. If they stay stable, and which they do, then whatever the revenue growth is in the long term, that should also reflect in profit after tax. So this degrowth, we would say, will not take it very seriously. We'll focus on the revenue growth now. Okay, and they are mentioning that the profit after tax is lower because of higher finance costs and depreciation due to operationalization of 5G spectrum. So something is happening on the 5G side, and for that reason the costs are increasing. But that is fine. Okay. Overall, if we see that the profit after tax is 20,000 crore in this quarter, and if I multiply it by 4, the profit after tax would come around 80,000 crore. But yearly, the profit after tax was 95,000 crore. So it is going to be in this range, 90,000 or 80,000 or 1 lakh crore rupees. If somebody is optimistic, we can say that the annual profit after tax of the company is around 1 lakh crore rupees. Okay. Now let's see Jio platforms. The overall subscribers they have is around 524 million, and they have had 36 net additions in the year. Half of them are actually 5G users. They're mentioning that they are number 1 in connectivity, but actually they are number 2, but they are neck to neck with Bharti Airtel. I think Bharti Airtel have more subscribers. And the other thing that they do is they are also in homes, which is broadband connections to home. And so the same number for Jio are here, 1.46 lakh crore rupees of revenue, and EBITDA is actually half of that. So half of that comes in profit, 76,000 crore rupees. EBITDA margin is 52%. This is the amount of data which has been consumed by Jio users. 241 exabytes. Okay, not important for us. These are some important numbers. Their key operating metrics. Their total customer base has been increasing rapidly. So we can see that in quarter 4 FY25 it was 488 million, but in quarter 4 FY26 it is 524 million. And they have been adding customers every quarter by quarter in a steady manner. Okay, so the important thing to note is ARPU, average revenue per user, which has been increasing slowly from 206 to 214 now. We know that they increase their tariff plan every now and then, right? And the amount of GBs the users are consuming, that also increases naturally, because now we watch more high quality content and everything. So per capita data consumption is it also increases. These are just some interesting numbers. And monthly churn is basically how many of their customers go away, switch or they close their account. That is 1.8 1.7%, so it is fine. And yes, so these are the kind of numbers which everybody likes. Jio, their revenue keeps on increasing quarter by quarter without any cyclicality, and the profit also keeps increasing. That is why these kind of business would be given higher PE or would be valued higher. Whereas in oil to chemicals or other businesses, this kind of growth is not seen, and I mean sometimes it grows then degrowth. So those kind of things are not there, and these revenues, these profit will not be affected by anything, geopolitics or anything, right? So that's why the company holds value. Now, so the same numbers for Jio platforms are here. I'll just see the profit after tax. The profit after tax in this quarter was actually 8,000 crore. You see, the overall EBITDA, the overall profit of the company wasn't that high, but here the profit is increasing for sure. The revenue increased by 12.7% and the profit after tax by 13%. This number I can say that okay, 12-13% is the growth of Jio platforms, and over time this will be the growth of the company, because this is the major contributor. Now coming to Reliance Retail. For Reliance Retail, I'll see the FY26 full year numbers. The revenue is 3.70 lakh crores. It has also increased by 12%, and the profit after tax has also increased by 12%. So that's why, again, the point that retail and Jio are much better business because of their non-cyclicality and steady growth. These business are growing at 12%, and therefore we can say that the entire company is supposed to grow at 12%. Okay, so what should investors pay for 12% growth? That is the question one should look for, and the kind of business they have. If they also increase their margins, the growth would be little higher, right? Okay, now let's come back to the overall group performance of Reliance. And the point to note here is basically that the fortune of the entire company lies in Jio and Reliance Retail. These are the two most valuable segments of their entire industry. There are other things as well. For example, media is there, Jio Hotstar is there, and energy is there, oil to chemicals, FMCG is there. But they are either old traditional, or even if they are new, they're not that significant. And most of their value is in these two. So for example, the market cap of the entire company is 18 lakh crore. And if we do a like-to-like comparison with Bharti Airtel of Jio platforms, because their profit after tax is also similar, everything is similar. So Bharti Airtel itself is 12 lakh crore rupees company. So we can give like 10% here and there. So Reliance Jio itself might be a 10 lakh crore rupees company, and retail is valued around like 5-6 crore rupees. Okay, so basically most of the value is in these two business, and how they grow will decide how the company grows. And we saw that the growth of Reliance Jio and Reliance Retail was around 12-13%. So now investors have to think that, like, for this sort of growth, what should they pay? As I already mentioned, the market cap of the company currently is 18 lakh crore, and if we estimate that for the next year, the profit after tax of the company would be 1 lakh crore rupees. So the price earning multiple of the company comes at 18, right? So it is for you to decide whether this is an investable company or not. I mean, it is an investable company for sure, but whether to buy, not to buy, that is up to you and your financial advisor. So, thank you.